Hello and welcome back to The Note. Everybody is still digesting the perhaps rather surprising news from the Federal Reserve that they are indeed beginning to taper off their QE bond purchases, but another very big central bank looks as though it's going to be on monetary ease for quite a long time to come. That's the Bank of Japan. What are the prospects for Abenomics? With me now to discuss this is our chief economic commentator, Martin Wolf. Martin, thanks for joining me today.
Pleasure.
Let's start with a trip to Japan. As I understand it from this chart, it does look as though the Japanese public has at last begun to grasp the notion that inflation could be in the future.
Yes, I think the Bank of Japan, which is the source of this, does believe that the evidence from these surveys, which you can see here very clearly showing a shift towards inflation expectations, quite marked, though not decisive, and evidence from bond markets indicates that actually people are beginning to believe that the BOJ will do what it says it's going to do, namely get inflation up to 2%.
And as I understand it, that was one of the critical points of the first arrow of Abenomics, to convince people that inflation might happen, that there would be some point in spending money now rather than saving it.
It is the principal point of the first arrow of Abenomics. One might even say it's the only arrow that is really being fired.
Right, and it seems to be heading towards its target anyway.
It does.
Now let's take a look at perhaps the more another rather serious problem, which is how well that economy can produce, how productive it can be. This picture doesn't look very, very reassuring, and will jolting up inflation expectations help it?
Well, the argument here is, first, it's clear that Japan did very, very badly in the 90s. It was a huge relative decline. Not so bad since then. It was only a very modest decline, actually better than most European countries, interestingly. The UK is also good. But the optimistic side of this, the Japanese will insist, it shows tremendous potential for improving productivity and therefore getting a relatively sustained burst of really fast growth again, really particularly fast growth of productivity, which they have to get fast growth because the labour force is shrinking.
Which is the kind of thing that people in the markets also get excited about. If you're starting from a low enough base, you have that much more of an opportunity for growth from where you started.
Indeed.
Now, however, let's take a look at the way in which that economy is structured at the moment. It often seems to be extremely constipated. You know, there's no great desire to spend or invest at the corporate level. What lies behind this remarkable share of GDP that is held in depreciation allowances and in retained profits?
Well, it's a very peculiar thing, but the big problem here is the wage share is very low. Households spend a lot now, so household saving is no longer a big problem in terms of demand, but there's this huge share of GDP going to the corporate sector in retained earnings, mostly accounted for by depreciation. They're not investing depreciation, and what that's basically telling you is that the Japanese corporate sector has been massively over-investing with very little return, and it would be far better, that's my principal argument, if they could shift the distribution of income towards households who will then go out and consume like Anglo-Saxons, and that would give them the situation in which they wouldn't need these huge fiscal deficits anymore to sustain demand. But they're not going to do anything about this, alas.
And what do they need to do? Plainly, the first arrow on its own is not enough to start jolting that money out into the rest of the economy. What do they need to do to make this work?
Well, I think there are three possibilities. First, attack these depreciation allowances that are clearly massively excessive, which would do the second thing, which would raise taxation of corporations automatically, which would give the government the possibility of transferring income to consumers. And then the final thing is look at corporate governance. Nothing much will happen, no doubt, but Japanese corporations are simply not being run for the benefit of shareholders. This is quite obvious. And in this case, what is resulting in is huge accumulations of cash by the corporate sector, which is not a sensible function for the corporate sector.
Okay, one final question which will fascinate all those on the markets. It seems to me that this is an argument for the notion that the BOJ is going to have to stay very easy for a very long time. Would you agree with that?
Yes. If they're going to get their 2% inflation target, they're going to have to remain easy for a long time, possibly dramatically so. This story, I think, has only just begun.
Okay, Martin, thank you very much indeed. So the Federal Reserve might be tapering off its bond purchases ever so gently, but it does sound as though the Bank of Japan is going to be carrying on the way it is at the moment for quite a long time to come.